Okay, so again, we're going to be looking into beginning inventory, and this is going to be a continuation of the previous problem. So now we're going to be looking at this scenario, right? The first thing that you're going to recognize is if you do have beginning inventory, it will actually let you know. Or if you're just continuing your inventory from month to month basis, or however you want to cut the period off, you're going to automatically know how much you've already converted the inventory. So here on June 15th, your ending inventory count was 80 units, which is the 80 toys that we had originally, right? And it cost us $123.20, right? This is from the previous one. Now we're going to be introducing, we made purchases on the 18th, and we made purchases on the 23rd. And then lastly, on the end, which is June 30th, we have an ending balance, a new ending balance of 60 toys. So again, we're going to break down each and individual ones, okay? So first thing we're going to recognize is going to be the June 18th. You made a purchase of 100 toys for $1.27 each. Freight is $25. So again, we're going to be looking into making another purchase. Oh, I should have split it up. We made another purchase of 100 items, okay, at $127, and we recognize the formula, which is the 127 times 100. So we have a total of $127 in purchase price. Then we're going to be recognizing that we had $25 of freight, which gave us a total of $152. And by taking that 152 divided by the number of units or quantity that we had, you're going to get that each item is still going to cost you $1.52. All right, then again, we made another purchase on the 23rd of June, another 100 units of toys for $1.30. So again, we recognize that we had $26 of freight, which ended us with $156 in total, with $1.56 per unit. So now we have our totals. We have a total of 200 items for the purchases that we made between the 15th all the way to the 30th. We have a total of $257 of purchases. And we have a total of freight of $51, which gave us a total of $308. Okay, so again, those four numbers are very important because now we're going to be filling out this chart here. Now, as you can see, we did the top part exactly how we filled out that bottom part. We got the totals of everything. Okay, so here we have the 257. We have plus the 51, gave us a total of 308. Now, we had beginning inventory. We had, on the 15th, we started out with 80 units, okay? And it cost us $123.20. Now, here's the formula that makes sense. In order to solve for goods available, you're going to be adding these two numbers together. You're going to be adding your beginning inventory plus your net purchases, which 80 plus 200 gives you 280. And same thing with here. You're going to add 308 to the 123.20 and you're going to get $431.20. This is your goods available, okay? So you have a 280 toys to sell, and you have the total of $431 available to sell. So now let's look on the right side. This is our inventory, right? We started off with 80, so we need to recognize the 80. We made two purchase batches of 100 and another 100. Now, we are utilizing FIFO. So in order to calculate this, right, which batch are we going to start with?
The 80.
We're going to start with the 80. Why? Because that is actually technically the first batch that we still have. That is considered our first batch. All right. So then again, we knew that we had 60 units at the end on the 30th. So in order to get a cost of goods sold, it's going to be 280 minus 60 gives you 220. So we need to calculate 220 units to find out what the cost of that is going to be. So again, let's look at the bottom right corner. We take 80 from the first batch. Okay, it cost us 154. In this case, we already know that we're going to get rid of that entire thing. So we're just going to take the whole $123.20. The net, that's only 80 though. We are looking at 220. So what's the next batch that we're going to take? We're going to take the next 100, the second 100, and it's going to be for 152. And we already know that's going to come out to $152. Now, if we total that, that's only 180. So how much more do we need to sell to get to 220?
40.
We need 40 more. And if we look at this table up above here, we have one last batch, which is the 40, which is the last 100, which we just need to take 40 items out of that. So then again, it cost us $1.56 each. So to find the total of just selling those 40 items, it's going to give us a total of $62.40.
Yes.
Okay. Once we've done that, we realize if you add all this together, that's 220, and the total amount that we sold is going to be for $337.60. And that is where we plug it in to the cost of goods sold. All right. Then now when we are down in our inventory, we're going to recognize that we have 60 units left, which is exactly what our ending inventory is going to be. And if you do 60 times 1.56, you're still going to get $23.60. Or you can go ahead and go 431.20, subtract the 237.60, and you're going to get the same answer. You're still going to get $93.60. Okay? So again, we filled out that whole table. All right? So, all right. So this is kind of easy, kind of not. It just does a lot of calculations. It's a lot easier when we move into Excel, because Excel will just calculate everything for you without, all you need to do is remember exactly what formula that you're going to be using and what cells you're going to be using. So again, it's a lot easier on Excel. Now again, here we're going to convert it again because we realized, hey, you know what? I'm at my end of the period. It's already June 30th. I know that I have 60 available in the end of inventory. So again, using the table that we just filled out, we're going to recognize our our purchases, our freight expense. We're going to recognize our ending balance and our cost of goods sold. And in here, we plugged everything in. Now, because we had beginning inventory, this is where you have to remember. If you calculated this exactly the way it is without the beginning inventory, it's going to be off. Okay? Because you have to remember, we still had inventory, but we sold that beginning inventory. So this is exactly why it's a credit on the bottom when we get rid of our beginning inventory, because we no longer have those 80 items anymore. So we need to take that out with the $123.20. Okay? All right. Is this okay to you guys? I feel like I didn't explain it as well. Understanding when you have beginning inventory, because you got rid of the beginning inventory, therefore you need to subtract from inventory, okay? Because you no longer have the 80 toys available in your inventory anymore. You sold it. It's gone. Yes, no. So
Yeah,
again,
maybe.
understanding what you have beginning inventory and your ending inventory. Okay, so we will go over this problem tomorrow. Okay, it will make a lot more sense. Okay,
I
Okay.
want you to understand that beginning inventory is always considered first in.
Yes.
Okay, this is going to follow through. First in, first out. Last in, first out. Beginning inventory is always considered first.
hmm.
Then comes your purchases.
Yes. All
Okay.
right. So again, chapter 5.3 review. We looked into, first off, we're focusing on a periodic inventory. We understand how to record our purchases. Now we're understanding our conversion entry. So at the end of the period, when we need to convert our expense into inventory, this is exactly what you need to do. You need to have the inventory, you need the cost of goods sold, and you need to zero out your purchase expense and your freight expense. So that's what this is going to be taking away. Now, other than that, is there any questions to FIFO in general? Anything?
Would you recommend us getting a journal of our own to practice this, or just practice